Hello, trading world. It is technically still January 25th, 2022, but this is my pre-market outlook and technical analysis for January 26th, 2022. The most important day of the week is here, Fed Day. And there are a lot of things lining up to make this a super volatile day. And before I get into it, let me first thank you for joining us here at JMJ Investments. Our goal is to provide an actionable game plan each trading day to help you reach consistent profits. So if that sounds like something you're looking for, go ahead and hit that like and subscribe button right now. Alright, now that I got the housekeeping out of the way, I'm going to go through as much as I can, as fast as I can. Things that concern me and should have you on the edge of your seat tomorrow and or overnight. I thought we had a temporary capitulation moment, but there are signs that this may not be so. The first sign is that the VIX is still in backwardation in a big way. On this chart, this is something that I often use to kind of sniff out temporary bottoms, and it's just basically a comparison chart where I have the different VIX calculations from the short-term VIX to mid-term to longer-term VIX graphed on the chart. And when short-term VIX is above the other VIX calculations, we are in backwardation. And as you can see, have been so for a couple days in a big way. And it concerns me that even though we're climbing, we haven't necessarily started to come back to normal. So that's one thing that's telling me that we still may not have put that temporary bottom in. Number two is the binary event coming tomorrow, which is the FOMC announcement at 2 p.m. With that, I also noticed in the charts that we were building a wall of worry between 435 and 439. And what I mean by a wall of worry is that it's just a big resistance level that it is hard to pierce over a couple days. The fourth reason is that even with energy fleeting from the weekly time frame, it has not yet cycled into oversold territory. Along with this, the MACD on both the daily and the weekly are still building delta to the negative momentum side. This is a 3-year weekly chart. And looking at the RSI here, we have yet to hit what would be considered oversold territory based on the RSI. And then also looking at the stochastic, we still have a little ways to go before we've reached the bottom of the channel or range for the weekly. So those are things that again kind of take me back to think we have not reached that temporary bottom yet. the next reason, I brought up a chart of Microsoft. Microsoft had earnings today just after the bell. And even with Microsoft giving good earnings numbers, the moves or the price action after hours leaves reason for concern. We had a huge dip right before earnings or right into earnings, and a lot of shakeout before we went right back up to where we closed at, or just above where we closed at. So for me, that's a little concerning, and it may pitch a little telltale as what we may be in store for tomorrow. So with all of this, I didn't really see the Microsoft data, but with the other things that I saw in real time, it sparked me to take some additional short positions and buy some calls in TLT for a possible morning flash crash or overnight super gap down window. So with all of that out of the way, let's get into the key levels for tomorrow, because tomorrow being a Fed day, it's almost like having 2 days in one. Alright, here we are with the key levels of the day, which are very similar to yesterday. Starting on the resistance side, the jack resistance is going to be the 434 through 435 area. Queen resistance area is going to be 437 through 439 area. King resistance is going to be 442 through 445 area. And keep in mind, since this is a Fed day, there's another level above this that I'm going to key on, which is going to be the 450 area. It's not written in, but just as a note, to have that 450 area when it's time for the FOMC announcement to be made. Now, going to the support side, jack support will be the 431 through 429 area. Queen support will be 425 through 420 area. And king support will be 416 through 410 area. Just like with the 450 area on the resistance side, keep 422 in mind, as this could be a magnet level we could revisit briefly at some point. Also, in order for a bounce to gain traction, we have to close above 439. One of the other things that I'm sitting here looking and going through different platforms, I'm checking all 3 platforms that I use. There's an apparition in the charts that is throwing some of the data sets I use off. If what I see is not a mistick, it could be possible we visit down near the 400 area on the SPY. It could be possible, being the magnitude of this FOMC announcement. And it could happen before. Like I said, I noticed a wall of worry being built, and it could say that we come in to tomorrow's cash open gap down a great deal. So be prepared for that. All right, again, I have to stress that since we are in backwardation, these are super volatile conditions. Levels are extremely hard to see and adhere to. One of the things I will be doing, I'm going to keep an eye on bond futures and the dollar. A sign that things are going to get out of hand would be bonds going above 156, pushing recent highs, and the dollar going above 96. It's possible with how nervous investors get before one of the most important Fed announcements thus far, bonds and the dollar could be a landing place for money in flight. Or primarily bonds could be that landing place. So that's one of the reasons I bought calls in the TLT beforehand. Now, getting into the primary scenario for tomorrow, or the scenario to prepare for. Fed days are special. There's an inordinate habit of buying or selling the event before it happens, which at times gives us a big trend move before the announcement is even made. There are more fireworks at the announcement. So, I'm not going to go through a bunch of different scenarios. I'm going to kind of plot the vice versa of the one primarily or high probable scenario. Give me just a moment. All right, the primary day type that could be most probable for tomorrow's Fed Day announcement could be the rounded reversal day type structure. And since Fed days are special, I'm only going to map the first part of the day here. And if certain things line up the way that I see, we could end up building up some good momentum to the downside before the opening tomorrow, getting us in a situation where we open gap down and that energy possibly continuing through the opening and heading down toward the queen and possibly the king support area, and making it there somewhere around or before midday, and quite possibly starting a reversal at that point before entering midday chop somewhere. Now, there's a vice versa scenario with the rounded reversal day. It is quite possible we could come in and continue what seems to be a wannabe rally getting started or kicked off the morning of. And if that happens, we could pretty much hit somewhere above or right around the queen resistance area before hitting a midday chop point. Now, the Fed meeting itself seems like its own actual day. The moves after the announcement are decisive. The first move is usually a head fake regardless of direction. If I am in positions or want to take position, I usually set them up ahead of time to trigger on the chart whenever that level is hit, because the moves are too fast to catch manually. Price action after the announcement will resemble a trend day structure in just a few bars. And let me get rid of this, and usually around the 2 o'clock hour, like I said, the first move will be a possible head fake. So at 2 o'clock we could look to possibly come down and touch a support level, and it's not going to take long. This could happen all in one 5-minute bar. So we could drop down to this 425 or below, and then shoot back up to wherever we started and just above, and have another down moment, and then start the trend for the rest of the day. So this is what, or quite possibly what, the actual price action after the announcement could look like. And this is primarily what I will be preparing for. Like I said, I took some shorts based on possibly having a gap down window coming into tomorrow. So it's not something that I'll be looking to hold all day, but if we get that gap down window and continue to flush, I'll be watching the VIX, looking at that backwardation to see if we don't pull back through to kind of give us some sign of a bottom. And I'll be looking to take those off hopefully before the actual announcement. Now, it is quite possible we get the vice versa on the announcement, where in just a bar we hit up, we come down, come back up, and maybe another down. Well, let me erase that one. And we hit the trend for the rest of the day. This is quite possible. However, something tells me that I'm looking for a flush and somewhat of a sell-off coming into the open tomorrow. So that's what I'm going to be looking to be prepared for. Another thing, I don't think we can hit a real dead cat bounce until the weekly chart hits oversold territory. In my opinion, this means a true capitulation bottom, with every stop being negative, no matter how brief. So I usually have to the side another in another screen. I'm always watching the advanced decline line. And while I want it, let me bring it into the screen. but I'm usually watching the S&P 100 advanced decline line. And what I mean by capitulation, we should see all 100 issues being tracked negative at some point. So that's what I will be looking for. I hope this helps. The FOMC announcement is usually volatile unto itself, but pairing that with the market conditions and backwardation that we're already in, this could really be a powder keg. So, as always, it is extremely important that you know and define your risk and be okay with that entire loss if you plan on stepping out and taking positions tomorrow. I'm wishing you a successful trading day. As always, be safe. Have a great day.